Hi, welcome back to the channel. I recently shared that I put the house I was living in on the market for sale and moved into a small one-bedroom apartment. So I thought it would be helpful to share my thought process on whether renting or buying makes more sense in today's environment. The housing decision is not a one-size-fits-all. It's more like, which size fits me? It requires careful consideration of both the financial and psychological impacts. And in this video, we will discuss these factors and break down the true cost of ownership. Hopefully, by the end of this video, you can make a more informed decision. Let's dive in. The financial factor is about making as much return from our investment as possible. When it comes to renting, we usually look for something we need instead of renting our dream home. But when it comes to buying a house, we are more willing to pay for something we want. To compare apples to apples, I found a house on Redfin in North Hollywood. It's listed for rent at $2,050 a month, at the same time, listed for sale for $835,000. Generally, home prices in Los Angeles are higher than the national average. I'm using this area as an example because that's the area I'm familiar with. But focus on the thought process so you can follow along and do your own cost analysis for your neighborhood. The cost of renting is straightforward. It's the rent you pay and the cost of renter's insurance. Average renter's insurance in Los Angeles is $22 per month. So this brings the total monthly cost to $2,072. These costs will continue to rise due to inflation around 2 to 3% annually. This means even though the starting cost to rent is $2,072, your total cost will rise over time. Now, the cost to own this home is a lot more complicated. When you buy a home, you usually pay more than just the home's sale price. You have to add closing costs to finalize the deal. Closing costs vary from lender to lender, and it usually runs between 3% to 5%. The cost covers various fees from title insurance to underwriting fees. You can either pay out of pocket for the closing costs or roll the closing costs into your mortgage. But if you do that, you'll be paying interest on those closing costs. You also have to consider the down payment. In most situations, lender requires a deposit anywhere between 10 to 20% of the purchase price to get the loan. Taking out a mortgage is your cost of borrowing money for your home. The average 30-year fixed mortgage peaked around 8% in 2023. Currently, it's hovering around 6%. And with the Federal Reserve announcing rate cuts last month, the rates will drop down even further. You also have to pay for private mortgage insurance if you put less than 20% down on a property. This is to protect the lender if you stop making payments on your loan. Average monthly PMI cost is between 0.5% to 1.5%. It is added to your monthly mortgage payment. Then there's property tax. The lowest in the country is Hawaii at 0.29% on average, and it can go as high as 2.46% in New Jersey. Here in California, the average property tax is 0.81%. However, with additional local taxes, the property tax in Los Angeles is 1.25%. A home insurance policy provides coverage to repair or replace your home in the event of damage from earthquake, fire, natural disaster, or flood. Where you live is a big factor on how much you will pay for homeowner's insurance. According to NerdWallet, the average cost of home insurance is $124 per month in Los Angeles. You also need to factor in maintenance and repair. Unlike a renter, you can't call the landlord to handle repairs. So you need to plan for a broken furnace, a leaky roof, or busted pipes. It's recommended that you budget anywhere between 1 to 2% of the property value for routine maintenance projects. And let's not forget the opportunity cost. Many financial gurus believe that opportunity cost eats away at any perceived gain in owning a home. When you put down payment on a house, you miss the potential opportunity to invest that money elsewhere. Say the S&P 500, which gives you an average annual return of 7 to 8%. Next, Let's look at the financial benefits of owning a home. One of them is forced savings. Every time you make that mortgage payment, one portion goes toward interest payment, and the other portion goes toward paying down your principal. The principal portion of your monthly payment builds equity on your house. For mortgage on this house, you will have forced savings of $8,721 the first year, or $726 per month. Then there's the tax deduction. You can deduct property tax up to $10,000 as well as your mortgage interest paid on the first $750,000 of the loan. It's really important to understand that the deduction is not a dollar for dollar reduction. You only get to deduct a tiny fraction depending on your tax bracket. Assuming you are in the 24% tax bracket, you can only deduct $9,565 from the $39,857 you paid in mortgage interest for the first year. Combined with your property tax, you can deduct roughly $12,569 or $1,047 per month. A common misconception is that every homeowner gets a tax break, but that is far from the truth. To claim this deduction, you have to itemize on your tax return. You cannot take the standard deduction. According to the Brookings Institute, only 8% of taxpayers take the mortgage interest deduction. Make sure to consult with your CPA. There's also the more nuanced factor like home appreciation. The last few years, many markets have seen double-digit growth in prices, but this kind of growth is not sustainable. Overall, home appreciation tend to keep pace with inflation. So for the purpose of this calculation, we will assume a more reasonable rate at 1% per year, about $695 per month. So with all that information, here's how much it will cost to own this house in Los Angeles. Adding 5% closing cost at $41,750, the final sale price of the house will be $876,750. Assuming we roll the closing cost to the mortgage with a 10% down payment, that means you'll be coming out of pocket $87,675 and receiving a loan for $789,075, which at 6% interest rate brings your monthly payment to roughly $4,257 a month. You are also responsible for PMI, which is another $592 a month. Adding $870 per month for property tax. Insurance is $124 per month. Assuming you are handy and can do most of the repairs around the house on your own, we can allocate 1%, which is $695 per month for maintenance. The opportunity cost of investing the down payment at 7% is about $511 per month. Next, taking into account of the forced savings of $726 per month, tax deductions of $1,047, and 1% appreciation about $695 per month. This brings our total out-of-pocket cost to $4,581 per month. It's pretty clear that the cost of renting is substantially less than the cost of buying. A study in 2024 shows that it's 38% more expensive to buy a house than rent in the US. Buying a home is the single biggest financial decision for most people. Let's now talk about the psychological factors and your lifestyle preferences. When it comes to renting, you have more flexibility as to where to live. You have the ability to relocate and move around. If you have the urge to live by the ocean, you can pick up and move. And when you change your mind and you want a place with a garden, you can move again at the drop of a hat. On the other hand, owning a home provides a sense of security and stability. When you buy a home, you put down your roots. And if you have a fixed-term mortgage, your monthly housing cost will be relatively stable as well. There are many advantages you get from renting, you just don't get from buying. When things break, like a clogged toilet or broken oven, you simply call your landlord and let him handle the problem. When you own a house, you have to take care of all the repairs and maintenance. But you also get to decorate the home however you want. You don't need to worry about losing your security deposit. Happiness comes in many forms, and pride of ownership and a sense of identification is one of the most important emotional factors when it comes to buying a home. If you enjoy a clubhouse, a tennis court, Olympic-sized pool, or a gym in your home, renting can provide those amenities. Upscale apartment buildings often offer lower monthly rent than a mortgage for a property with those amenities. Then, of course, you can also buy a more affordable home with private outdoor spaces and customized to your liking, like planting a vegetable garden. So which makes more sense? The decision to rent or buy is far from a simple matter of which is less expensive. Both financial and psychological factors play into the final decision. Continue to rent if it gives you more flexibility and more options in the future. But if you choose to prioritize home ownership for the emotional needs, even if financially the numbers don't make the most sense at the moment, you can always refinance later when interest rates come down. Thank you for watching. If you find this video helpful, please give it a thumbs up and subscribe. It really helps out the channel. I will see you in the next one.